Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to Saheb Academy. Now in today's video we're going to understand what is trial balance, why do we prepare it, and how do we do it. So see, trial balance is nothing but just a summarization of ledger accounts. Simple as that. But now you will wonder, how is that? Yes, let's discuss about that by going through the accounting process. See, you all know that in accounting, each and every transaction is recorded on the basis of its source document, the evidence of the transaction. And that first recording happens in the journal and subsidiary books. Yeah, this journal will not be a single book, it will be many number of books. There will be proper journal, and then there will be subsidiary books such as purchase books, sales return books, and so on. So the first recording will happen over there, and then that data will not be that much meaningful to the managers of the business to take the decisions. So that's why that data in the journal and subsidiary books will be summarized into T-shaped accounts called as ledger accounts. All right, and then after preparing these ledger accounts, what we're going to get as an accountant, we're going to get the balances, debit and credit balances, and those balances are very meaningful to the managers. All right, and then what happens, and then comes the picture of trial balance. Okay, trial balance comes into the picture, right? So in trial balance, what happens is, whatever balances we have got from the ledger accounts, those balances are taken and put into one statement that's called trial balance. Is that clear? So that's what basically a trial balance is. It's just a summary of ledger accounts. So when you will see the trial balance, you will have an overview of the financial transaction that has happened in a business. Is that clear? Right. And then trial balances, of course, it is a base for preparation of financial statements such as profit and loss, balance sheet, cash flow statement, and statement of changes in equity and everything. All right. So trial balance is not a financial statement itself. Okay. Financial statements is different. Trial balance is just a report. So see here, a trial balance is a report that lists the balances of all general ledger accounts of a company at a certain point in time. So it's a statement which contains all the balances of all general ledger accounts. Yes, that's what I said. And then it is prepared at a certain point in time, usually at the end of the year. Is that clear? Right. And then why do we prepare the trial balance? As I said that it is done to summarize the ledger accounts. That's the primary reason, to summarize the ledger accounts, but also to provide a base for preparation of financial statements. Okay, because on the basis of trial balance only, it is easier to prepare the financial statements. Directly the balances will be picked up from the one statement. They don't have to go on looking into the separate ledger accounts and go through all the books. No, in just one statement, it will be possible to have all the balances which needs to be taken to the profit and loss and to the balance sheet. You all know, right? The balances of expense and income, revenue and expense, those balances are taken into the profit and loss, and then asset, liability, and equity, these balances are taken to balance sheet. Is that clear? Right. So that's what, to provide a base for preparation of financial statements, and then to establish arithmetical accuracy of books. When trial balance is prepared, what happens? All the balances are taken and then it is matched. The debit will be equal to credit. Yeah, it will match. So when it will match, it gives us an understanding that there is arithmetical accuracy in the books. But it doesn't guarantee us, there are some limitations. It doesn't guarantee that all the errors are prevented or something like that. No. Okay, there are some errors which will not be prevented even if the trial balance matches. Even if the trial balance, debit is equal to credit, still there can be errors such as, omission errors, original entry errors, reversal errors, and principal errors, and all that. We'll see that in the rectification of errors chapter. All right, not now. So that's all you need to know. So now, what's the format of trial balance? See here, the format of trial balance is very simple. Serial number, ledger account. Yeah. Ledger account means what? The name of the account that you're going to take into the trial balance, and then ledger folio column, debit and credit. All right. So now this is the format. Okay, we got it. But now how do we prepare the trial balance? See, it's very simple. Whatever balances you have in the ledger account, closing balances, you have to pick them up. Yeah, make sure all ledger accounts are balanced. Pick up those balances and transfer those balances into the trial balance. Transfer the closing balances of each ledger account to appropriate debit or credit column. Now for example, we have cash account, okay, ledger account, and let's say we have 20,000 closing balance in the cash account, in the T-shaped cash account. So now what you're going to do, you're going to pick that 20,000 and put it into the debit column. Cash account 20,000, like that. But why in the debit column? Because cash account is an asset account, it has debit balance, so that's why that balance has to come in the debit column. Is that clear? So see here, you all know this, right? Modern rules of debit and credit. So drawings, expense and asset, they have debit balance. So all these nature of accounts will have debit balance. For example, furniture, it's an asset. Yeah, rent, it's an expense, debit balance. Like that, you have to pick and put into the appropriate column. All right. And then liability, equity, revenue, they have credit balance. So for example, if you have creditors, where it will come? It will come in the where? It will come in the credit column. Is that clear? Like that. Bank loan is a liability, it will come into the credit column. Why? Because it has credit balance. Capital has credit balance, so the amount, the balance will come on the credit side. So that way easily what will happen, all the balance will be taken over here, debit and credit. Yeah, and then at last you will have to add it up and it will match, it will be equal because of double entry system. You know, in double entry system, what is there? For every debit there will be an equal credit. So of course both of these things have to be matched. If it is not matching, then what will happen? If it is not matching, see here, if it is not equal, accountants have to locate and rectify the errors. There will be some errors which needs to be rectified and then it will match. Okay, so first you have to pick the balances, transfer the balances to the appropriate debit or credit column, add up the amounts of debit and credit columns, you will have the totals, see if it matches. If it matches, then you're good to go, trial balance is ready. If it doesn't match up, then what you have to do, you have to check for the errors and rectify them. Is that clear? That's the way you have to prepare the trial balance. Simple as that. So what is trial balance? Trial balance is nothing but just a summary of ledger accounts. Simple as that. All the balances, closing balances are taken and put in over here, and you have an equal over here, the totals, right? Yeah, so that's what a trial balance is. And then there are, you know, different methods, the way in which the trial balance is prepared. The first way is the total method, and then we have balance method, and then we have total and balance method combined. But what we are going to use, and it's mainly used in the companies, is the balance method. Okay, not this total method and total and balance method, it is balance method only. So now what happens in this total method? In total method, what you take is, see, if you have a T-shaped ledger account, you take the sum of debit and the sum of credit side. You don't take the balance, the closing balance. No, you take the sum of debit and credit and you put it over here, like that. And in the balance, what do you do? As I said, we pick up the only closing balance and put in over here, 20,000, like that. Is that clear? So that's what we do. And in the total and balance, the combination of this. But what you have to focus on only is the balance method. So shall we see one example and see practically how to prepare the trial balance? Yes, let's see one example. Yeah, now here we have the example. See, this whole thing is the question: prepare trial balance through balance method. So we have been given so many ledger accounts, T accounts, and on the basis of this we have to prepare the trial balance through balance method. What does balance method mean? It means that we have to only pick up the closing balances from each of these T-shaped accounts and put it into the statement which is called as trial balance. And you already know the format and everything. Yeah, so the same thing we have to do. I have already done that. See here, trial balance as at 31st March 2021. Serial number column, ledger accounts column, ledger folio, debit, credit. You can also take over here name of the account, particulars, whatever you like, it doesn't matter. Fine. So the first account we have, the T-shaped account, is furniture account, and it has which balance? It has debit balance, because furniture is what? It's an asset, so it has debit balance. So this closing balance is debit balance. That's why we have to put this amount 3,000 into the debit column. Furniture account 3,000. Is that clear? Right. Next we have cash account, and you know cash account is an asset account which has debit balance. So this closing balance 7,500 is what? It is debit balance. So cash account 7,500 into the debit column. Is that clear? Right. Next we have salaries account. See here, what is salaries? Salaries falls into the expense category. You all know that. Yeah, it's an expense. So expense always have debit balance, so that's why this 2500 closing balance of this account is a debit balance. That's why salaries account 2500 into the debit column. This is how you have to do this. Okay, it's all about the elements of financial statements. Yeah, if you know what are the elements of financial statements, and if you're able to categorize each and everything in accounting into only these 6 categories or 5 categories, then easily you can prepare the trial balance. It's not a big deal. Yeah, right. So that's what we are done with 3 accounts. Then we have Sham's account. But now see here, Shams is a person account. Yeah, it's some guy, Sham. So now how can we classify Sham into any of these 6 categories? How are we going to do that? See, it's very simple. First, you have to identify. Now, a person to a business can be a debtor or a creditor, right? Creditor is a liability and debtor is an asset, right? And debtor has debit balance and creditor has credit balance. So first you have to identify whether Sham is a debtor or a creditor. See, it's very simple. What have we done to Sham? We have purchased goods from Sham. See here, buy purchase is 25,000. Yeah, so we have made credit purchases from Sham. So that means he is our creditor, he's our supplier. So we have to pay money to Sham. So he's our liability, he's our creditor. And creditor account has which balance? It has credit balance. It has credit balance. Okay, so 3,500 is the credit balance. So that's why you have to take it and put it in the credit column. See here, Sham's account 3,500. Is that clear? Yes, simple. Next we have purchases account, and purchases account is an expense account, so it has debit balance. So 26,000 is the debit balance, this closing balance. You have to put it in the debit column, 26,000. Clear? Next we have purchase return. Now see, the logic is very simple. Purchases was expense, it had debit balance. Purchase return is opposite to that, so this will have credit balance. Is that clear? Right. So this closing balance of 500, this is credit balance. You have to put it in the credit column. Purchase returns 500. Next we have Ram's account. See here, Ram's account is again like Sham only. It's a person account. We don't know whether he's our debtor or creditor, whether he's our asset or liability. Yeah, so first we have to identify that. Ram's account, what have we done to Ram? We have sold goods to Ram, so he's our customer, right? We have to receive money from him. He's our debtor, so he's our asset. Debtor means asset, so it has debit balance. This account, Ram's account, has debit balance, so that's why this closing balance 4,900 is debit balance. So that's why Ram's account 4,900. Clear? Fine. And then we have sales account. You all know sales account is a revenue account, income account, and revenue account has credit balance. Yes, so it will be taken onto the into the credit column. Sales account 30,500. Yeah, credit column. Next we have sales return. Again the same logic which we apply to purchase return. Sales is revenue, it has credit balance, so sales return is opposite to that. Our customers have returned the goods back to us, so it's opposite to sales. So that's why you have to consider this account has which balance? Debit balance. Sales have credit balance, this is opposite to that, so this has debit balance. Fine. So buy balance carried down 100 rupees. This is what? This is debit balance, so you have to take it over here. Sales return account, debit. Is that clear? Right. Next we have capital account. See here, capital account has credit balance. You all know that. Yeah, capital account means what? See here, equity or capital. Yeah, so it has credit balance, so that's why it will come onto the credit side. Fine, I mean the credit column. Capital account 9,500. Is that clear? Yes. And now if you add up all of this, then what happens? If you add up all of this, you will get 44,000 on both the side. Shall we do that? See here, let's do that. Can you see? Right. So 3,000 plus 7,500, sorry, 7,500 plus 2,500 plus 26,000 plus 4,900 plus 100, that's equal to 44,000. Next we have this side, 3,500 plus 500 plus 30,500 plus 9,500, that's equal to 44,000. So it tallies. Of course it will tally. Yeah, trial balance will always tally. Debit will be equal to credit. If it doesn't tally, then you have to do some adjusting and it will tally. Fine, because of errors. Yeah, So that's how you prepare the trial balance. It's nothing, it's very simple. There's nothing to learn over here. All we did over here was we just picked up the closing balances, inserted over here, and then just tallied this debit and credit columns. That's all. That's all trial balance is. Is that clear? Fine. So that's it for this video. See you in the next video. Bye.